This video is part 16 of an ongoing series looking at WD Gann's work. I'll be demonstrating how Gann made his trades using planet cycles, and I'll show you how to apply the same techniques to the market you follow. Please subscribe to get notified when new videos come out. In this video, I'll be interpreting WD Gann's book, Tunnel Through the Air, showing how Gann was actually documenting his own trades in the text, but I'll be going further and showing you the actual planetary setups that were the real reason Gann made those trades. You can see other Gann setups in other parts of this series on our channel using the Gann Research playlist. Now to the Tunnel Through the Air setups. Looking at Robert Gordon's trades in the cotton market, the book mentions a trade on page 66 when it says, "I have already made arrangements and sent my money to a broker in New York, and I have today bought 200 bales of July cotton at 13.8. Talking about July cotton, so that means a July futures contract. Now there are different editions of Tunnel Through the Air. I think some may have a different number of pages, so I'm obviously referencing the copy I have, but you should be able to find the text I'm referring to easily around these page numbers if you want to read it yourself. So that trade was first mentioned on page 66, and the reference to January the 24th, 1927 was made on page 70 in my copy. Now, you need to read through to around page 112 to get this summary, so it's quite a bit of work just to list the trades that Gann actually made. So on January the 24th, 1927, Robert buys July cotton at 13.8. On February the 1st, Mr. Kenilworth buys it at 13.7, so 0.1 lower. We've got on March the 15th that the book mentions the price of cotton is 13.75, so it's going up since Kenilworth bought. A couple of days later, Robert buys for Marie at 13.9. So all trades are in profit at this point in time. And on the 24th of April 1927, the text notes that the price of cotton is 15.4. Now Gann mentions in the book that profits have been made on the 7th of May. On the 19th of May, the price of cotton is 16.0, and on the 1st of June 1927, Robert sells at 16.8. Now, the low in the cotton market was actually before that very first trade and was actually on the 4th of December 1926. So, what Gann was doing and describing in that text was just adding to his trades and buying additional contracts. So whilst Gann used various techniques to buy more contracts and compound his profits, the start of the move was actually a classic Gann astrological setup. So what we've got is a T-square involving the largest planets. We've got Neptune, Jupiter, Saturn in the T-square, and Saturn is conjunct the Moon and Mercury, and they're trine Uranus. Note that Venus is conjunct the Sun, and also that Venus is the next closest fast planet to the setup. Now in the book, Robert Gordon sold on the 1st of June 1927, and these were the aspects on that day. So now we've got Venus in a grand trine with Saturn, Uranus and Jupiter conjunct, and Venus is also conjunct Mars. And this was the setup at the high that ended Gann's trade. This video is part of a multi-part series, so please subscribe for future updates, including Elliott wave analysis. There are more articles covering, for example, the sunspot cycle on our website at elliottwaveasx.com, and more content is being added all the time. Thanks for watching. Links are in the description.